Bitcoin and the crypto market have experienced a pullback recently, and this is mainly about policy in the US. President Trump is talking about tariff wars and creating all sorts of economic incentives for people to put America first. He's defending the US dollar and making it stronger, and that's pushing a lot of risk-off activity into the market at a time we've predominantly seen in past cycles things taking off. A lot of people think, this means the top of the crypto market. Well, not actually. All that's happening is that the macroeconomics are playing into the crypto space. That's it. Everything is on track. We're just getting a bit of a pullback at the current time. I would like to thank everybody for their comments. In yesterday's video, we have an incredible global family. When we look at Bitcoin, the levels to watch yesterday were 98,384 and 94,574. And I pointed out something towards the end of that video, that Bitcoin would be controlled by total. Now, how do we get these two numbers, 98 and 94? What we did is that we just look from a structural perspective, and we understand that that structural level playing out at 98,384 and the structure at 94,574 are basically the areas that we need to look for a bullish confirmation or a bearish confirmation. And what did Bitcoin do? It basically flatlined. Now, why did it flatline? If you remember, in the last video, I put these little arrows up here and here. I'm just going to go into that again. All charts are intercorrelated and interconnected. We look at Bitcoin and also total. Notice this peak here and this bottom here. That's like what happened with Bitcoin, but there's a little bit more to it. Let's just pop on the indicator from the service. What we're seeking to understand, and you can get these lines yourself, you can mark them up yourself with level 1 and level 2 standard certification. This line up here around the 3.16 trillion and this line down here around that 3.05 trillion basically captured Bitcoin's price momentum. I pointed this out yesterday and I said, keep your eyes on this level because there's support inside the crypto market. And you may have seen that I, just at the end of the episode in yesterday's video, I was trying to give you a little hint that I thought Bitcoin had a stronger possibility of going up than down. And this is just because of this structural level playing through the entire crypto market. Going back to Bitcoin, you can see that total resistance there and total support in here. That's why Bitcoin has just basically gone sideways. And we've seen a degree of upward momentum inside total crypto market cap. Now, how this plays out in terms of the total crypto market cap is that we've got upper bank plays, Binance Coin, SHIB, Floki, Pepe, Bonk. They've all done very well, XRP, and also Solana. On the lower bank, Bitcoin is there, Ethereum, ADA. And when we're talking about Bitcoin, this is the directional momentum of Bitcoin. It just shows you that the alts have taken off. Now, whilst everybody's claiming doom and gloom, and in yesterday's video, I took you through the fear and greed indexes from the stock market and also the crypto market. For this reason, I was anticipating a degree of upward price momentum. If you've done the profiting course and you're looking through your charts correctly, you would have picked up on that as well. And don't worry if you didn't, it does take a bit of time. You can get this free watch list at CTKSmethod.org. What we're going to do is to scroll down here to row 7. How you get the right tickers up and marking up the right charts is really, really important. A lot of people don't do it and they wonder why they don't have the right lines. There's a lot in level 1 and level 2 standard certification, more especially in level 2. So row 1, how would you get up ADA, the right chart of ADA? You would just click there and then drill into supercharts. Say we wanted to look at ADA, Solana, DOGE, and XRP from a structural perspective. Let's do it. First things first, we would just drill in on ADA, and then we would go to supercharts. Now that we're in the right chart, you can see ADA USD here, and this is ADA, and we know the price of ADA. We need to go into indicators, private invite only scripts, and add in ADA for this month. So let's just pop that on. Now, the one thing that we can see here, ADA was supported around that 69-cent mark. It also has a lot of overhead structural resistance around 72 and then 74. If we seek to determine what kind of percentage we can get out of this, it's about 3%. So that's actually not bad. A lot of people look at small percentages and say, but I haven't been taught to go after small percentages. I've been taught to go after 1,000x's, million, billion x's, well, 100x, but millions and billions of percentages. This is not actually the way that financial markets work. If you turn over very small percentages, and you do it regularly, you'll find that your account absolutely blows up in the right direction. That is, it's going to become really big really quickly. This is a secret that institutions play with. Each chart has its own structure. And when looking into DOGE, what can we see? DOGE is pretty much up and down and all over the place, but they're all following Bitcoin's gravity. Now, what does this look like from a structural perspective? We just go to indicators, private only or invite only indicators, and then we pick out DOGE. And we can see that DOGE looks really different. It doesn't have a lot of structural support below it. In fact, it has a negative CTKS gap and very, very light support. You probably can't even see it from this perspective, but I'll just throw a rectangle on it. That may make it a little bit easier to see. You can see that there's very, very light structure underneath. In fact, it's so light, it kind of isn't realistically there. So what does this mean for DOGE? DOGE is encountering upward structural resistance at the current time. Does this stop DOGE? Absolutely not. DOGE can get through it, but just remember this is where the sellers are seeking to sell. It would be much better if it was just above a lot of structural buy areas, so that means the probability of it being supported is much greater. Let's have a look at Solana. When we look at Solana, we have the right chart here, fantastic. Now we go up to invite only indicators, and we add in the indicator for Solana. Now what we can see here, Solana's in a little bit of a different position. If you want to get more default areas here, you can just go down to more settings, go to symbol, go up to here, press default, and whammo, you're all there. We can see that Solana is looking pretty good. It does have levels of structural support. That's a good thing. And also, we're coming up to structural resistance at the 199. It's interesting to see that a lot of retail thinks that big levels like 200 and 150, etc., those kind of numbers, they have a lot of structure in them. That's not necessarily correct. It is 199 that has the structure, not the 200. 200 has a degree of structure, but it's pretty light. It's the 199 level that we need to get across to confirm bullish price momentum. If we come down, we could come down to that 195 mark and find support. When looking at XRP's chart, indicators, invite only indicators, and then just pick XRP. And of course you can set these charts up all in advance. We can see around that 242 level, we've got some fairly good structure, and XRP looks to be confirming that as support. And we have a positive CTKS gap up to the 250. So if we're looking for potential percentage returns, this one is not bad. That's about 5.42%. By analyzing structure, you can figure out where things can go up and where things can go down. If you've got a negative CTKS gap, price can move down very, very quickly, but these are volatility gaps. It can just whipsaw up and down. You can make a lot of percentages frequently. So having a negative CTKS gap below is not a problem. I'm going to be awarding partial scholarships for the Profiting from CTKS Method structure course. You'll find it on par to the Masterclass. This is from CTKSmethod.org. It's not in the Masterclass site. It is a very, very powerful course. and it took me about 12 months to create. Financial markets are run on mathematics, and this is an excerpt from one of the classes. What I'm trying to show here, if you turned a 1% profit and you did it cumulative each day for 365 days, you would make a 37.8% or 37.9x return. If it went to 1.5%, that would be a 230x. 1.75% would be a 563x. And if you got up to 2% per day, that would be a 1384x. The issue here is that a lot of people think that you have to have a lot of money to get into the market. You don't. You just have to get the knowledge. And just as we talked about in yesterday's video, Rule 368 is a really important one. Enjoy the process and not the destination. We can't take shortcuts because if we do, they'll cut us to shreds. And what you'll find when you do something like this, when you buy on red, sell on green, buy on red, buy on red, buy on red, buy on red, and sell on green, buy on red, sell on green, you can do very well. But how well exactly did that trade do on a pro rata annual basis? And you can see that the market was not at all forgiving. This was a very negative market and a huge amount and degree of fear, just like the markets we have right now. As I've said for many years, you don't have to make big percentages to make big percentages. You just turn over those small percentage trades and they add up to a ridiculous amount of money. That little extract was from the Profiting from CTKS Method Structure course, lesson number 2. To be eligible for that partial scholarship to the Profiting course, please reach out and directly message me on LinkedIn. The link is in the description of this video. In yesterday's video, we were talking about shortcuts, and shortcuts definitely cut you to shreds. And Edwin from Into the Charts said, I come from the creative industry and I understand the temptation of shortcuts. I'm a maestro at working efficiently, but efficiency does not mean skipping the fundamentals. Very well put, my friend. The problem with shortcuts is they often sacrifice essential steps, the very foundation that allows you to master your craft. Everyone wants to progress quickly and see results as soon as possible. However, true growth and expertise take time. If you aim to go far, the path will always be longer, requiring patience, practice, and sometimes even revisiting your fundamentals. The key to mastery is not just in speed, but in precision. Doing the right way ensures that you can trace back your mistakes, refine your skills, and build something that lasts. If you rush through the process, you may achieve quick results, but they will be fragile and you'll find yourself struggling when challenges arise. Remember, skill and knowledge gained through proper learning will always outlast temporary gains from shortcuts. Wow, what words of absolute wisdom! Our community is absolutely incredible. I love you all so much. TF Theta said, no shortcuts, only hard work. And Lucas said, Percy is back. Yoga Friend Studios said there are no shortcuts that can lead to any success. Awesome. You can see we just have an amazing, amazing community. And a little while ago, somebody just put in a comment that they were getting hammered by the market. And there was so much love and support from our community. You are all amazing people. NP said no shortcuts. Absolutely, my friend. And Port Power came out with something absolutely sensational. When you think about it, the real shortcut is to learn things properly and slowly to achieve your goals no matter what they are. To go fast is just a dopamine hit and is short-lasting and gets you nowhere in the long run. This is so true. Suksan said no shortcut, and no shortcuts is the way to go. CJ said, a great reminder of the standards we must hold ourselves to whilst on this journey. TSP, no shortcuts, period. Oscar said, no shortcuts. I'm getting the feeling that people are not into shortcuts. Well done. Gianluca said, no shortcuts, consistent persistence. Grubbiz said, putting in the work, enjoying the journey fully and not skipping those shortcuts. What is earned is not to be returned. Yeehaw! Very good, my friend. Luckjit said, shortcut success equals success cut short. Whoa. I'd like to thank LMG for the very kind comments and the very fearless sharing. It's just beautiful what people do inside our community. We are a real community, and as Levlo said, our community is quality-based, not quantity-based. You're here because you want a better life, and you want to do it properly so you keep your success. You are awesome. And I really recommend that you read LMG's comments and the responses to it. Just brilliant. Andrew said, no shortcuts here. John said, there are no shortcuts. All the shortcuts I tried were actually dead ends. Price has 100% at integrity. News is a story, structure holds. Very awesome. And Samsona United, I hope I helped you a little bit just understanding why the cycle is off, just slightly this particular cycle. Built to Spill said, I have learned to enjoy the long way. Shortcuts are cheating, and cheaters never win. And Built to Spill said, I do not fear AI trading bots. They are a shortcut. A lot of people that were using AI trading bots got absolutely whacked recently. And if this happened to you, I feel very sorry for you. You're here because you want a better way. And Built to Spill said, any success I now have is hard-earned, and losses are turned into lessons with more work. Now, what does this mean? A loss means that you can understand why the loss was created, and you can learn a lesson from it. You get the knowledge, so you don't repeat it again, or you don't repeat it at the same level of intensity. Great work, Built to Spill. And Luke said it well. Institutions have shortcut my portfolio. I'd like to thank everybody who watched and commented. That is just awesome. We're a very family-safe community. You can reach out and you'll find you will be supported inside our community, inside our global family. Our focus is on learning. The key levels to keep your eye on throughout the weekend, the 98,384, if we manage to get above there, that confirms bullish momentum. And if we lose the 94,574, that confirms bearish momentum. Across the weekend, crypto does tend to drift, so please just be aware of this. To let me know you've made it this far and you're incredible and awesome because you're putting in the time and you're seeking to learn how to think like an institution of one, just please pop in the comments something about a 2% return or even a 1% return compounded daily, how that works out. That is seriously secret knowledge. Very, very few people understand this. And even fewer actually apply it. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.